Hello traders, hello everyone. How are you doing, everyone? Can you please just confirm that everything works well? Can you see the charts? Can you see not see, but hear my voice? Just please, if you're watching this on YouTube, TradingView, maybe also on Twitch. I think that we are streaming there as well today. Okay, so guys, we have pretty interesting start of the week. As you know, the main theme of this weekend and start of a new week is probably the OPEC, who cut the production. So we are seeing a pretty interesting volatility. So far, crude oil just gapped towards $80, so it's a pretty big and impressive move, and we will cover the wave counts on a lot of those very important major markets like each time. So I will start actually with the S&P 500 today. As you can clearly see, we are trying to return back to risk on flows for the last few weeks, and despite these bank issues, bank crisis, so it looks like that with speculations on Fed on hold and fact that traders, investors see Fed helping banks with liquidity is some kind of a stimulus. So that kind of actions are seen as dovish. So it's not a surprise that yields are coming down, stocks moving higher. With bank crisis, speculators just don't believe that Fed will keep raising rates, obviously because they can cause a recession. However, US dollar did not see any major move lower yet, despite higher stocks. Okay, now in normal times, you would expect that in this risk-on environment, commodity currencies like Aussie, New Zealand dollar would be outperforming a lot. Okay, but that's not happening. But maybe these moves will come with a delay. Maybe still sometime this week. After also there were some recent news that Brazil, Russia, India, China, and South Africa are working on creating their new own currency. So it should be pretty interesting week. We also have some important data, as you know, coming out on Friday. You have the jobs data, so obviously jobs are still very important. They are, as long the job market are in good conditions, the Fed still somehow could have some room to lift the rates further. However, it looks like that no matter what the comments are coming through this morning, still the market is just not buying the US dollar. We are actually still seeing US dollar weakness despite some hawkish comments from Fed's bullards. So actually, it looks like that this correlation, higher stocks, higher euro, higher pound, higher Aussie, could still maybe come back in play, but maybe with a delay. Now, firstly, I want to look at the big chart here on the S&P 500. Keep in mind that I'm looking as a pullback from the highs as a corrective one. I think that this can be a wave 4, but obviously it's not easy to say where wave 4 will finish, because if that's still only can be easily just one part of a much higher degree wave 4. Okay, so keep in mind that this can be some very tough times, especially if you're maybe just expecting new all-time highs by the end of the year. Maybe that's not going to be the case, because if you're tracking wave 4 of the same degree like this wave 2, then obviously there's plenty of more time for this wave 4 to unfold, right? And there can be different type of the structures. But it's very important that whenever you look at the longer term price chart, that you always try to label the wave count so that you look and expect more upside within the current trend, because there is much higher probability that you will be right, rather than calling the multi-year top and we are expecting, let's say, drop back towards 2000 or so. It's very important that if you see any kind of a pullback, and if that kind of a pullback can be labeled in a corrective fashion, that you label this as a correction and be aware that market sooner or later can continue to the upside. Okay, because there are plenty of trend continuation, but the top or the low is only one, the major one, of course, right? So I'm looking this to be a corrective phase, and I'm ready for either to be away for a little bit more complex, or maybe even we are going to see a retest of the highs. Who knows? Looking at the daily chart, I'm so far tracking this triangle here. Okay, now I think that there can be some resistance coming in play, especially because we are also seeing VIX here moving into this. If I make this bigger, you can see that VIX is moving now back into this area of this 2022 cycle, the lower range. Okay, and normally when that's been the case, what we have seen is that the S&P 500 found resistance. Okay, so I would not be surprised if we somehow trying to maybe to slow down, to stabilize, maybe towards the end of the week, ahead of the non-farm payrolls report. And also then you will have there are obviously holidays, okay, ahead of Easter holidays. So maybe these markets will in the first 2 weeks of April, maybe they will slow down for a bit. So just be aware that even if we slow down, I think that we could see only a wave E pullback. So even some kind of a deeper pullback, I think it's still not going to be any major resumption of a new downtrend. Okay, I still think that we are here probably correcting for a triangle, and that after any pullback there can be more upside coming. Looking at the 4-hour chart, we are now testing this resistance. Of course, there is room for slightly more upside till we really complete all the needed subwaves for a wave C. Keep in mind that wave C is a motive wave, right? So even if you think that there should be a limited upside and a completed structure or a top in place, you need this 5-wave rise first. So I still think that there is room for more upside after any near-term pullback, but then the real resistance around 4,200 could be seen. Okay, so as we go towards the end of this week, just be aware that there can be some pullback, some resistance coming. So ideally, there will be a higher degree wave E retracement, right, to complete this big triangle. But still, we are, at least on the intraday basis, we are in the risk on mode. We are also seeing ASI now finally trying to catch some of the upside here. So if you look on the ASI, we have some very interesting move, but keep in mind that tomorrow there is a rate decision from Bank of Australia, and inflation last week came down. Okay, so maybe they will not be hawkish. Actually, I think that they will be on hold, and this could maybe put some resistance in place on ASI. But as long as we are now going to see maybe stocks still in uptrend, I think that ASI could finally catch some moves on the upside. So far, we are breaking this resistance at 67.57, but the real major move would probably be if we see an overlap with 68.58. Why this overlap is important for the ASI? Because then this drop that I counted in 3 waves as an ABC would be obviously confirmed as a completed down here, because you would have this overlap. And as long as there is no overlap, this could actually be still a wave 4. So I'm really curious to see if, despite potentially dovish RBA, okay, we can maybe stay strong on the Aussie dollar. If Aussie dollar will remain above 67.57 after the Bank of Australia, then I think that Aussie will see more upside. So even if they are not hawkish and you see currency still strong, then you really know that even news cannot pull the currency down. So with stocks in risk on mode, with Aussie then still holding the bit here, then I think that Aussie could fly much, much higher. So I definitely will keep an eye on this one. And of course, if we see some extensions higher, I would potentially look for for opportunities on the long side after the pullbacks. Okay, if suddenly, let's say, stocks are still in uptrend, RBA will be dovish, Aussie come back to the downside, it breaks 66.50, then unfortunately we will have to go with let me update the wave count here, with this one, which shows that you are in a wave 4 here. So I think that in the next 24 hours we will have some interesting decisions here on Aussie regarding, maybe even regarding the some major moves that could come if we see this overlap, as I said, 68.58. Okay, that's the major level here. Okay, let me take a look also on dollar index. Now, dollar index is definitely in downtrend, I believe. Let me review after some time. Let me review this big picture. Okay, so last year we were looking for this major top on dollar index to be formed. Okay, and we been comparing the rise from 2001 to 2022 highs to this cycle from this one from 2001. No, sorry, from 92 to 2001 highs, right? So these were very similar moves here. And what I really like about the current development is that we stopped at the upper side, and even if we try to focus on minimum expectations, the market could resume towards the lower side of this channel. So I still think that there is room for more weakness, even if just temporary, right? There can be even drop towards 95, 96 level. However, looking at this daily chart, I'm not really sure if this wave 2 has finished here. Okay, I'm just aware that maybe something a little bit more complex could be forming here. This could even be, this recent rally could even be still wave 4. So I will try to be careful here, especially if we see maybe stocks that maybe the S&P 500 will rally out from that triangle, and we know that in a few weeks there should be a limited upside, right? So that's when, if stocks will suddenly come back to the downside, then dollar could potentially find some support. So I'm looking for this to be maybe wave B unfolding right now. So you could easily retest 100 level, maybe. That's probably the most important psychological level, and then watch out for this wave C. So I still think that this is quite possible. Also, the reason is looking at the euro dollar. Keep in mind that euro dollar, okay, could face some limited upside because inflation in the eurozone is somehow surprisingly to the downside. So also ECB obviously is following the Fed. So if the Fed will be on hold, the ECB will do the same. Okay, so maybe after all of this, we could see that speculators will try to turn more dovish on or bearish on the euro dollar. Looking at the euro dollar wave counts, here is what I'm tracking. 5 waves up for a wave 1. You had a wave A of a wave 2, so you are now in a wave B. Very nice resistance, could be around 1.1030. Okay, so that's resistance for potential flat. But at least in the near term, I think that there is room for more upside, because if you look at the recent price action, especially with today's rally, I think that this could really be consolidation within uptrend. So possibly there is ongoing triangle. Let me label the subwaves here. Okay, so something like that. It's very probable here. Okay, and then you rally towards this resistance that goes back from February. Okay, so if that's going to be a triangle, really to unfold one, then you know that moves out of a triangle will cause the final lag within a higher degree trend. So again, there will be another reason why we could potentially expect the limited upside. Okay, so for now, euro dollar is, in my opinion, based on the latest developments, is bullish and could potentially see, as I said, more upside after a triangle. If we suddenly dip, let's say, back below 107.80, then your support is around 107.00 level. Okay, but still for a potential wave B as part of a higher degree correction. Now, if I show you the alternate count, could be this one, that you are in a fifth wave, but even higher degree, but even this one obviously suggests more upside. So after this consolidation that we are tracking on an intraday basis, which could either be a triangle or can finish around 107 as I said, I will continue to look higher. Okay, especially stocks are still in an uptrend and could potentially drag the euro dollar higher with it. Hope that makes sense. Now let's take a look also on cable. So cable is in uptrend. It looks like it's ready to retest maybe this week, to retest these highs here from earlier this year. We've been tracking this wave 4. So keep in mind that despite this uptrend, there can be fifth wave resistance not that far away as we think. Of course, the first one is around 1.2630 level, is the 61.8% of wave 3 measured from end of wave 4, and then I took the distance of wave 1 measured from end of wave 4, which comes in around 1.3 level. That's also a very big level. So whole zone up here, whenever we rally into this yellow square here, that's when we should be careful about potential limited upside. Okay, so again, even when euro dollar could potentially make that pullback for a higher degree wave C, that's when we could also maybe face the corrective setback here on cable as well. Also keep in mind that, as I said earlier, if the S&P 500, let me revisit this chart again because that's important. If the S&P 500 is really forming a triangle here, okay, it's really forming a triangle here, then there will be limited upside whenever we see this wave C. It will not be a straight move to a new high because triangle can never occur in a wave 2. Okay, so keep in mind that if this is going to be a triangle, if we get this wave E pullback during Easter holidays and then we rally, then we will see limited upside for wave C, and that's the same time when euro and pound could also potentially see limited gains here. Okay, hope that makes sense. Now let's take a look also on crude oil. So crude oil, as you said, is coming higher after recent announcement from OPEC to cut the production. Russia announced they will extend cuts through 2023. Saudi Arabia will cut production by 500,000 barrels per day from May. So it looks like that everyone expect that demand will decrease because of potential this crisis. And of course, they want to stabilize market because crude oil, after all, already seen a very strong decline. After all, if you look here, let me change the color. If you look here from 2022 highs, we have seen a pretty aggressive decline. And now imagine they have a lot of oil, especially maybe reserves, and demand goes down. What you expect, what usually will happen? Well, crude oil could fall much lower. So obviously they want to stabilize this market, and that's why we are seeing quite nice recovery so far. More importantly, we are seeing a pretty nice reversal after this fifth wave that came down from a triangle. Now, if you were in our webinars over the last few weeks, you know that we've been tracking this one pretty closely, and so far we are still only in wave A. Okay, so much more upside here could be seen for potential wave B recovery, but we will be in a corrective rally here. However, there is the first resistance right now around 81, but the major resistance should be around $93 to $100 per barrel. That will be the major resistance for this year, I think. Okay, now if we take a look on the 4-hour chart, I really like how the wave 4 pullback. Okay, so once the gap is filled here around 76, this will be a new perfect support for a new resumption higher. Okay, so I will definitely keep a very close eye on this one. You also, if we maybe respect the current swing high, maybe speculate that this could be end of a wave 3. Well, 38.2% is exactly at this gap level here around 76. So I think that that's a pretty nice textbook example so far for for this recovery to continue after the retracement, of course. Also, I said earlier, you have this base channel, right? So this base channel, whenever it's broken, and then you can expect that this is wave 3, part of a new impulsive uptrend, what would you expect is that on a retracement, this upper trend line will hold as a support. Okay, that's the first support. And then you have also the middle line that maybe could act as a support, and then obviously the lower line. Okay, so as long as we are above the lower line, that's how long we will expect the market to continue higher after a retracement. So I still think that there can be very nice opportunities here on crude oil, but not here. Okay, I just think that there is plenty of risk now that maybe the gap at some point will be filled, right? So you definitely don't want to trade against it unless the gap is filled. Now, when the crude oil is in uptrend, NOK, CAD, Mexican peso will try to do very well. Now, we also highlighted this last week, and so far Mexican peso is doing very well. You can see that market actually after this bounce here, and that actually happened when crude oil dropped towards $63 per barrel. That's when this dollar Mexican peso hit resistance. And then we expected that crude oil at some point will stabilize because the move came out of a triangle. It was a fifth wave. And after the 5-wave movement, you can expect that market will slow down or even reverse. And that's what is going on now on crude oil. So now when the crude oil is in recovery mode, this one is easily back in downtrend. And Mexican peso, as you know, it has probably highest rates compared to other central banks. So it's not a surprise that dollar Mexican peso keep moving lower, especially if we also have stocks in uptrend and if you have these speculations that Fed is going to be on hold. Okay. Also, the jobs data will be very important on Friday. If the jobs will be, if the jobs will still be very strong, of course, there can be some pullbacks in favor of the US dollar. But if jobs will drop, then I think that dollar Mexican peso will easily extend towards 17 target, which is actually triangle measurement target. So I took the distance of wave B, projected from the breakout point, and that's the target here. So I still think that dollar Mexican peso is for now in a downtrend and should resume here. If you look on the 4-hour chart and update it a little bit. Okay, so that's wave 1, you have a wave 2. Now you're in a wave 3. We have the 261.8% extension target for a wave 3 that comes in around 70.70. So if someone wants to to look for some shorts here, what would I love to see here is firstly that we break maybe even slightly below that level to make maybe extension, maybe possibly even towards 161.8%, and then watch out for a wave 4 pullback, which could later on maybe stop at this resistance here at the previous low. So obviously, if you want to play the breakout or maybe to catch this downtrend, I should say, you want to see a decisive breakout here, not just a spike and then rally. You want to see market maybe to close on a daily basis below that level, and then maybe something more downside could follow in a wave 3, and then watch out and wait for this wave 4 that could stop at the previous resistance, because downtrend will be valid and stay in place as long as we are later on trading below that level. You don't want to see a spike, as I said, and then rally. Then obviously this would be seen as a failure breakdown. But more importantly, wave 5 is a motive wave, should be made by 5 subwaves. So as long as that's not the case here, from that highs from 1922, that's how long we should continue to look and expect more weakness here, okay, for these sequence to complete. Also, let's take a look on on dollar NOK. Okay, so dollar NOK, if you're watching some of our free updates, you also know that we've been expecting dollar NOK to move to the downside. I'm quite surprised that this pair didn't fall much or more compared to where the crude oil is currently trading, but looks like that still there is room for weakness, because if we look here at the latest developments, we are clearly breaking this channel support. So it looks like that this minor correction here from last week close could be finished. So I'm looking for more weakness here, and if we break this 10.27 and maybe even close below that level on a daily basis, then I think that there will be even more weakness coming to complete this new 5-wave cycle that I will be tracking. So because I see crude oil in uptrend, I think that dollar NOK will stay in downtrend. Of course, crude oil, as I said, could potentially fill the gap. When this happens, lower crude oil prices could potentially cause some choppy price action here on dollar NOK. But even if we, let's say, break this resistance 10.46 and rally towards 10.60, it would still be seen as a whole corrective rally here within downtrend. Okay, so if I label this for you, let's say that we break that resistance here. Okay, I would be still looking this to be wave 2, and this then wave A, wave B, and wave C rally to complete wave 2. Okay, that would be the alternate scenario then. So I still think that the dollar NOK, no matter how I look at it, as long as we are trading below that level here, below March highs, I think that this March low should be taken out, right? Okay. Now let's take a look on gold. Okay. So gold have some nice price action. We talked about this one obviously in the past updates. So what's going on? Well, that was wave 1. You had a very nice wave 2, strong wave 3, and wave 3, and now consolidation. Okay, and looks like that this consolidation can be an ABCDE triangle, and we've been talking about this in the past updates. Also, it looks like that's a very nice support that still will keep this uptrend alive. If suddenly we dip, let's say, below today's low, which is at 1950, then I think the new support still could be seen at this 38.2%, which is around 1930. So then obviously I would be looking for, let me adjust here, for slightly different wave 4. Okay, something like that. So keep in mind that corrections sometimes can be tricky. So it's very, very important that you observe and have maybe multiple scenarios on the price chart, rather than be then surprised later on when the price actually triangle, then you see wave C and then a reversal higher. So as long as we are trading here around above 1900 level, I think that this uptrend still at some point should resume, and maybe even revisit these highs from March, and then obviously the next target would be the all-time highs, in my opinion. Okay. Now let's take a look also on what I have here on dollar yen. I forgot dollar yen earlier. Hello Johnny, hello Emmett, welcome here. So dollar yen, now I still think that major top obviously has been put in place, and that we are in a new downtrend. Okay, now we found the first resistance here at the 38.2%, after making this very nice pullback of, what was this, of almost 9%, and it was similar in distance compared to this price action when we had this pullback in uptrend back in July 2022. So looks like that maybe some kind of another perfect scenario for a bearish head and shoulder stop formation, but looks like that these corrections, however, based in length, have some similarity compared to the one that unfolded in uptrend and now in downtrend. More importantly, from that level 138 we can count 5 waves down, okay, but as a leading diagonal. So I'm seeing this as a potential start of a new bearish sequence. But looks like that even if we are now just in a corrective rally, that this corrective rally has some more upside before the correction can be finished, because this rise looks like it's an impulse. So I think that dollar yen in general, at least that's how I look at it, I would not be looking for any longs on yen, okay, or maybe I should say shorts on yen crosses or on dollar yen, especially because this obviously is linked also to yields, of course, but it looks like that this correlation has been lost a little bit, and that higher stocks currently has a very strong impact on those yen crosses. We can see CAD yen also turning significantly to the upside, clearly with 5 waves. I will show CAD yen also in a second. So against the previous leading diagonal, the price will not stop, will usually retrace to the wave 2 rather than wave 4 and stop up there, okay, because obviously wave 3 in that example is not extended one, and that's why you can expect that maybe consolidation will extend a little bit further. So this resistance comes in around 135. Also, that's the 61.8%. And if you look closely here on the on the intraday chart, you can clearly see that I can count 5 waves up. Waves 1, 2, 3, triangle for a wave, and a wave 5. So more upside should be expected here after a 3-wave drop. And as long as I said, as long the stocks are in uptrend, okay, I think the Japanese yen could fall lower, especially versus commodity currencies. Okay, now if we take a look on CAD yen, and we talked about CAD yen last week, and we've been bullish on CAD yen, we called a bottom formation. And the reason why we did this is because we saw crude oil turning higher. We saw room for more upside on the S&P 500 as well. And we had that wedge on dollar yen, which also suggested a bottom. And of course, the wave count itself here on CAD yen was pretty clear. We had this wedge formation. More importantly, despite breaking to a new low, the price made only failure movement here and then immediately reversed higher. And this reversal occurred after potential ending diagonal. So this ending diagonal usually occurs at the end of the trends. And they are slow, choppy, overlapping. They will try to confuse the traders because of those overlaps and not clear directional moves. But normally when they are finished, the price will reverse pretty quickly and erase all of the ending diagonal. Well, all of the ending diagonal, meaning that this could be headed back towards 101 level. And this certainly is possible because this rise from that low is in 5 waves. Okay, so again, you have 5-wave movement out of an ending diagonal. Potential resistance now here could be in place around 99 level. So I'm not sure if wave B will occur from current levels, but certainly you should watch out for potential pullback. And whenever we see pullback in 3 waves, the first ideal support based on current price action would be around 96.50 to 97. Okay, so I think that CAD yen could potentially see more gains, of course, but after the pullback. If we look on a daily chart here to give you this look, obviously why I'm looking for a correction is because I can count 5 waves down from 2022 highs, and we know that after 5 waves down, correction can occur, and normally this one will take price back to the area of a former wave 4, okay, when you have this an extended wave 3 like in our case. Okay, someone asked for, let's take a look for Kiwi real quick here. Okay, so Kiwi is really consolidating. I'm struggling a bit, to be honest, with the short-term wave counts because it's not really clear. So it's important maybe to make a step back and look what's going on a higher degree chart here. Nothing has really changed, and I will still stick with my view. You have this very strong impulsive rise from October 2022 lows, and you have now the corrective phase. But unfortunately, I cannot say if wave C has already ended here or no, because if you look closely here, on this latest price action, this could be easily triangle. And if this is a triangle in the middle of this recovery, then you know that at some point there will be limited upside. So I really cannot say that we have bottomed here or for a wave C, that we are headed straight to the upside. I definitely should also show you this wave count, which suggests that maybe we are in a wave B rally and that we will bottom around 0.6 level. But as I said, no matter how I look at it, at least on the longer term picture, I think that that Kiwi at some point will be higher, okay, rather than breaking these October lows. Hope that helps. Now, let's take a look on 10-year US notes. Okay, so 10-year US notes, we are seeing this market on apply to all. Okay, we are seeing this market in a corrective phase. So either we are in a wave 4 or maybe already in a wave B. In either case, I think that there is room for more upside. Looking here at this daily chart, I think that we completed wave A, that was a sharp wave B, and now we are possibly at the beginning of the higher degree wave C. So still there is a plenty of room for more upside. Keep in mind that one of the reasons why potentially we could be looking for further upside here and lower US yields, obviously, is because the market believes that Fed is going to stop the rate. So I think that the US yields could be a little bit challenging maybe, but definitely I'm not expecting any immediately or strong decline back towards these levels. Also, I'm bearish on dollar index, and this makes sense if the 10-year US notes obviously are in uptrend. I'm not sure if I have it TLT. I have it here. Let me look at now. Here's TLT. Also, you can very easily see very strong reversal from the highs. You have an ABC correction. So on this 20-year bonds obviously could also see more upside. Even maybe that's going to be subwave 2 right now unfolding. Okay, like this. So I'm expecting more upside on treasuries. Okay, now let's take a look on Ethereum. Okay, so stocks are in uptrend. It's interesting that cryptos were in uptrend before stocks rallied, but then everyone expected that because stocks joined the risk on mode that cryptos will explode, but it's not happening. Cryptos are trading sideways, but there is still room for more upside, and I will not go to the higher degree charts. I will just share this one with you. It's a very straightforward. You have obviously very strong recovery. You are in uptrend, right? And then whenever the pullback from the highs occurs in 3 waves, you know it's a correction or part of a complex correction. So you should be aware that there should be more upside coming, and that these highs here should be retested. Okay, that's not the case yet. So I think that there can be more gains, especially since we also broke this trend line resistance, potentially with 5 waves up. Then after that, you can even count this as a potential flat correction here for a wave 2. So I think that there can be more upside coming. If suddenly, let's say that market will just keep consolidating, then this whole price action could even be some kind of a triangle, still not finished yet. But the more important is that this drop from the highs unfolded in 3 waves. That's the most important thing, and meaning that we should continue higher. Looking at Bitcoin, also here we have few ideas. Now the first one, the primary one, suggests same thing, 3 waves from the highs, a bounce in 5 waves, meaning you should stay bullish. As long the market is trading above 26,500, I think there is room for more upside. Even this wave count, which is not aggressively bullish, shows potential triangle, and even this one suggests that we could see more upside. But then be careful if we reach 30,000. Now 30,000, again, it's a very important round figure. So if we don't break this resistance decisively, then obviously discount could come in play, and you could potentially face resistance and then later on a deeper pullback. But for now, both wave counts are valid, and both suggest that we are still in uptrend, so cryptos could do well. We are seeing prices in risk on mode on stocks. Crude oil is recovering, and we are seeing dollar index still, at least in the short term, this weakness towards 101, as discussed earlier. Even if it's wave B of that flat correction, or maybe 100 level, still could be retested. So at least for the start of the week, as we approach Thursday, Friday, you have jobs data. That's when this sentiment could change, in my opinion. Okay. Okay, traders, I hope that you enjoyed this presentation. If you have any questions, anything, please let me know. If you like this video, please support us, give us a like, subscribe to our channel, leave us a commentary, and make sure to join us in our next webinar, which of course will be scheduled soon. Traders, enjoy your day and talk to you soon. Bye.